2022 has been a year of steep repricing in interest rates, some of which did not come as a surprise, but I would say that the magnitude in general versus what the market was pricing 1 year ago has been a big surprise in this respect. Nonetheless, we're ready to call this the peak on inflation, and our view is the numbers will come down pretty materially. To cut the story short, and looking at the financial sector, our view is that this steep repricing in front-end interest rates is actually something that we were looking forward for a long time. Our outlook for next year is one where the banks have 10-15% higher profits than what we thought just a few months ago. There has been no real reason for spreads that have widened over 100% across seniors, across tier 2s, and across additional tier 1s. One of the reasons that have, the spread widening, which I mentioned, I think we would look at the investment case on our framework around the three aspects. One is fundamental, which is paramount, i.e. how the company is doing. The second one is valuation, and I would say that if valuations and returns for investors are a good prospect versus their fundamentals, the risk reward is favorable. There's a third element, which is a bit more mechanic, which is the technical side. And so that represents who needs to buy and who needs to sell. Now, banks have a characteristic where they have to access the market very frequently to fund their balance sheet. And so generally, either if the market is good or bad, the banks still have to issue. Now this year, 2022 has been a technical dislocation, and so a lot of the spread widening is not justified. And this I would highlight also, underlying the fact that many retail, simple European banks are up more than double digit this year. They're buying back shares and they're paying dividends. So our view on the technical in terms of issuance required next year is actually materially lower than what we witnessed in 2022. And so a pretty balanced technical where we will have a normally functional primary markets. So it is very unlikely that we would witness a technical dislocation like the one we have witnessed in the past year, and hence the technical does turn positive or neutral towards financial bonds, which will make the risk reward really stand out versus historical dislocations and versus what happened in 2022.